So thank you everybody for coming today, and thank you for the patience while I was sure we could hear me, but apparently now everything is working. So this week is perhaps not the best week to give examples of what I'll be talking about, but we have so many others. So we're going to talk about 5 things to know when trading the news. Trading the news, knowing what's going on, is super important for everybody who trades gold, forex, commodities, of course, stocks, and cryptocurrencies as well. One example from the recent past is the U.S. elections. Once it became clear that Trump was going to win, and then he won, then cryptos shot higher. That's a classic example of trading the news. We'll talk about these kind of things and affects other assets as well. So first I'll begin with a quick introduction of myself. My name is Yohay. I'm Senior Financial Analyst and the Premium Product Manager here at FX Street. Beforehand, I had my website called Forex Crunch, and which you can see now on the screen. And I work for FX Street already, since 2018. So slides are moving a bit slow, but yeah, I'll get to the gist of things very shortly. My focus is on fundamental analysis, but my colleagues here at the Premium Service, some of them are a little more fundamental, some more technical, so we have quite a bit of variety here. Okay, so just before I begin, I'll do my quick pitch. For those of you who are not Premium members yet, we provide exclusive, reliable analysis, providing actionable stuff and empowering you to take informed trade decisions. We answer questions. That's, I guess, the biggest, not I guess, I'm sure it's the biggest advantage we have here at FX Street Premium. You can access us and ask questions all the time, and you can improve your trading instincts, including with webinars like this, to give a bit more in-depth information. Okay, so we have a busy agenda today. We're going to talk about what is priced in when talking about market events, identifying weak and strong currencies, combining fundamental analysis to identify false breaks, and talking about each currency pair and how they respond to fundamentals, before finishing with the classic buy the rumor, sell the fact. Okay, so fundamental analysis, basically, what we're talking about is central bankers in many cases, how they impact, they have the biggest impact on markets. So when they raise interest rates or cut interest rates, this is the most important thing. And markets are also interested in data that impacts these interest rates, okay? So in general, when interest rates rise, the currency rises, and that has a negative impact on gold and also a negative impact on cryptocurrencies. When interest rates fall, it's good for stocks and good for gold, good for cryptos, and of course bad for the US dollar in this case. And there are also other central banks that have different impacts. So yeah, so that's the very basic. I know some of you have lots of experience with trading, but that's the basics of Forex, of trading. Good economy means a higher value for the currency, and the weaker economy means a weaker value for the currency. But it's a bit more complex than that. Fundamentals in general make the long-term trends. That's the impact. How the bigger trends, when you zoom out, at least to the 4-hour chart, but better to the 1 day, 1 week, 1 month charts. And technicals for me are more useful for entry and exit points. Okay, that's how I see trading. So here are a few basic things to know. Understanding what's priced in. This is from the FX Street calendar. When you have 2 figures coming out, one is more important than the other. In this case, the one which has 3 exclamation marks. Highest volatility has the biggest impact, and it overshadows a less important event. So in this case, ISM manufacturing PMI is more important than construction spending, for example. Okay, and what's important is the consensus. Not only if the figure came out good or bad in absolute terms, but what it was in comparison to the to the consensus, what economists think. At FX Street, we have a calendar which includes all the major pieces of data, and we recently introduced also an immediate snapshot of Fed speeches. So we have a system that analyzes these speeches and provides an instant hawkish or dovish verdict. Okay, I don't think that appears in my slides, but you can check it out. And yeah, it's important to know which events are more important, of course. And let's continue. It's not only what you see on the calendar, but sometimes there are rumors that impact currency markets. So they're more common in the UK and in China. We have leaks in these countries that markets move before events come out. And these rumors or reports are more accurate when it comes to political events. Okay, so the example from 2 weeks ago, when Kamala Harris was not declared as the winner in Virginia very fast, eventually she won that state, but when it didn't happen fast enough, it was an indication that Trump had an advantage. Markets didn't wait for the official call that Trump won the elections to move in response to what they expect from the president-elect. They moved already at the beginning, okay? And there are many more examples there. If Middle East, if Iran threatens to attack Israel, you can see oil prices rising, and even when they didn't attack just yet. Okay, so it's always important to understand what is priced in before acting. So we have changes and hints towards releases. So, well, we're 2 weeks away from non-farm payrolls, but it's the most important event now. So sometimes what you see on the calendar does not reflect the full expectations because the calendar is updated a few days in advance, and then we have, in case of non-farm payrolls and very few figures, leading indicators. So if we have non-farm payroll consensus is 240, but then ADP non-farm payrolls comes out above expectations, and also the ISM non-manufacturing PMI, and all these figures are really strong. Real expectations from non-farm payrolls are actually higher. And this is something we comment constantly at FX Street Premium, getting you ready also for the real expectations. Okay, so that's always important to know what is priced in. So another thing to watch out for is price action in the hour before the release. So sometimes you see everything stable. Traders are just waiting for the release. That's simple, and they can jump both ways, better than expected one way, worse than expected the other way. But sometimes you see markets already moving nervously towards one direction. It shows either rumors or expectations. Markets begin pricing one outcome over another. This may be right or this may be wrong. So you can see this pulling of the worm to one direction. One thing it means for sure is that the reaction to the news will be powerful because either this movement is proved correct, and then you might see a small extension of it, or if it's wrong, then you see a massive pullback. So that's also something to take into account. In many cases, it can lead to a buy the rumor, sell the fact when these expectations prove correct, but and the market's already priced it in. So you see them moving in the other direction. We'll talk about that more towards the end. Okay, so understanding what is priced in is super important. Now let's dive into a more complex topic, but I think it's super useful and could serve you soon. So you can use, you probably heard this many times before, but taking a decision not to trade is as important as deciding to take a trade. And if you're not trading, you're calm and you're on the sidelines and you can see what's going on and use this information for the next event. So you can identify a currency, you can identify a weak currency if it falls on a small miss. So just a bit of disappointment and boom, the currency collapses. Or if that currency gets good data, but it only does a small bounce, what's called a dead cat bounce. And I apologize to all cat lovers. That's just the expression. So if you see that kind of a market reaction, that shows that the currency is weak and it's prone to bigger falls. Okay, and on the other hand, strong currency is one that reacts super positively. It just looks for an excuse to jump. So a minor beat of expectations, it shoots higher, or there's a weak data point and it ignores it. Okay, this is resilience. This is strength. Okay, so we can use this information for the next trade. So in case, let's say, we'll give you an example here. So if euro dollar rallies on the weak US release and the Aussie USD does not, okay, so this is the case. We have a weak data point in the United States. Euro dollar shoots higher, but the Aussie USD doesn't do anything, okay? Then we can identify that the euro is well positioned, that it's strong, that there's lots of buying demand for the euro, but that the Australian dollar, not a lot, okay? We can use this information, and the next time we have a weak data point from the United States, buy the euro, okay? Because we expect this trend to continue, at least in the short term. And looking at the other angle, in the next strong US release, we can sell the Australian dollar because we know the Australian dollar is vulnerable in general and can suffer the next time. Okay, and we can look at it from another angle as well. So if euro dollar rallies on a week, we'll take the exact same example. If the euro rallies on the weak US release and the Aussie doesn't, we identify the same. Euro is strong, Aussie is weak. So we can buy the euro on an okay or better European release. We know that the euro is just looking for an excuse to jump. And taking the same example, we can get the Australian dollar and sell it even on a minor miss in Australia. Okay, I hope that this is quite straightforward. Just use the reactions to the events to trade the next event. So identify which currency is suspect, is prone, has high propensity of rising, and which is falling. Now, false breaks. I know this is sometimes a delicate theme. Markets, in many cases, they make an initial move out of the range and then go back to the range. What does it mean? Is it a real break? Is it a false break? Is it just the first attempt before the next one? So we can use fundamental analysis. We can use the data to see what's going on. And to see if it's a false break and we'll get back to the middle of the range, or it's a real break and the next attempt will be super powerful. So let's say we had euro dollar breaking higher of its range and then retreating back to range. So far we know it's a false break. We know it's just a small move. So if it came on top of a good European release, we can probably expect to follow through higher. So the euro had strong data. It was enough to get it above the range, good, but there were lots of stop loss selling orders there, and it returned to range. But its fundamentals are strong enough. Okay, so on the next, you can really expect to fall from there. But if it's on a bad release, if it makes this break higher and then returns quickly to the range, we know that the fundamentals of the euro are weaker, and we can say, okay, this is a false break. The move higher was totally fake, and now it'll dive deeper back into the range. Okay, and let's take another example, just to the other side to keep things symmetrical. So we have euro dollar trading in range, and now, whoops, it falls out of the range. So if it came on top of a positive European release, you can say, okay, there was some selling power there, but it's gone. broke out of the range, but it's a false break to the downside. Maybe it's a good idea to buy this pair within the range and expect it to rise within the range. But if it came on top of a weak figure in the Eurozone, say, okay, the first move was thwarted, but the second one, that could be a big breakdown to the downside, and we can sell the currency. Okay. I see somebody writing. Maybe I'll wait a second and answer a question before, because this is a more complex topic than the previous ones. Assuming the question is about this. Yeah. Well, I see still writing, so I'll continue for now, and I'll stop to answer the question in the right time later on. So let's look at the bigger picture. Yeah. So the question is, or a comment here is, then what are your steps in the morning to select the pairs you want to trade that day? Well, I look mostly at fundamentals. So I see which events are big events today. Mostly looking at US events because they have the biggest movements. And then also at Euro or Pound events, which, well, Pound-related events are published early in the morning. And I want to see how these currencies react to the data. And that gives me an indication of what's going on afterwards. I also look at data in Asia and what happened the previous day and the political environment. So, well, to give you a full answer, it would be a bit long, but I'm trying to look at the bigger picture to see what's moving markets, which events we had in the previous days, which are coming next. If there is a big announcement overnight, let's say from China about stimulus, if there is a big political event in the US. So there are quite a few things. You see which currencies are on the move. The yen has been moving quite a lot in response to news recently. Not the most popular currency, but I recommend taking a look at that if you want to look at strength and weakness. Okay, so I know it's a partial response to your question, but hope I gave you some answers. We'll have more time for questions at the end. So I'll return to what I talked about of identifying false breaks. So we're looking at the larger trend as well. We're trying to see if a break to the upside or to the downside is real or not. So we want to see how big the surprise is. For example, if we see a surprise, let's say, in the data to the upside, and we have a move to the upside which isn't a full one, then if it's a small surprise, the break is probably meaningless, probably a true false break, and the currency pair will return to range. If the surprise is huge, then, and we also only had a small break, the next time we have it, it'll be much more significant. Also watch out for simultaneous releases, okay? So sometimes we have lots of data points coming out at once. So I have before we jump to the next thing, we have sometimes the US and Canada releasing their jobs reports at the same time. In such a case, I suggest moving away from dollar CAD. It could be a bit choppy, to say the least, and dangerous to trade. In other cases, we have multiple, let's say, US figures coming out at the same time. So we have jobless claims maybe better than expected, but GDP released exactly at the same time, worse than expected. So that creates a messy situation. Okay, so I would refrain from, I would let the dust settle, check out what it means before acting. Okay, and also look at the larger trend. If the break is, say it's a break to the upside, and the bigger trend is to the upside, there's a much higher chance that the second move will be already the significant one. If the trend is to the downside and that move up was to the upside, then it's probably a false break. Okay, so you can use news events and breakouts to identify the next moves. Okay, stock now go currency by currency. Well, we have this guy coming back to the White House in around 2 months from now exactly. But this is not the easiest currency to trade. So the US dollar is not always the best thing because of what US dollar especially is the world's reserve currency. So many central banks store money in US dollars. It's very important in trade, and that turns it also into safe haven currency. When the world is in trouble, then the dollar is in demand. So sometimes you can have weak US releases and you expect the dollar to go down, right? Because the US economy is suffering, interest rates are set to fall, right? No, if the US is suffering, the rest of the world is in bigger trouble. That means, where do you go for safety? To the United States. Super counterintuitive. This is not the current situation. The current situation now is that strong US data means higher interest rates, means stronger US dollar, and weaker US data means interest rates are going to fall. Let's sell the US dollar. But this situation can change. That's why I don't think the US dollar necessarily provides the best fundamental reactions. Okay? And also this factor called politics, which especially now with Trump coming back to office, you can see lots of news moving on what the president-elect says, his nominations in this case, or threats to China. I mean, imposing higher tariffs means a stronger US dollar because it means higher inflation in the US, and going a bit softer means a softer US dollar. Okay, so when rates are rising or when the economy is doing well, strong US figures mean rate hike is coming sooner, stronger US dollar. But in other cases, when, well, we'll talk about the weak situation now. With weak US figures, rate hikes are coming later or rates are falling. And then we have weaker dollar, but once again, this can change. Market dynamics are dynamic. Okay, let's move to another problematic currency, also called the devil's currency, the British pound. So first, we always experience front running. So the pound moves before events, either due to leaks or to traders in London or elsewhere moving markets. And it makes sharp moves. So you can see pound dollar, pound yen, pound anything moving strongly around events. And it doesn't always make sense. Again, this front running of new US releases is a significant factor. Another problematic one is the Swiss franc. Swiss franc serves as a safe haven of sorts. It reacts strongly to events in the Middle East, for example. So when there's trouble in the Middle East, Swiss franc rises. When things get calmer, it falls. But it's not always a safe haven currency, especially not against the US dollar. And the Swiss National Bank promises to intervene from time to time when they don't like where the currency is going. So that's also something to watch out for. And reactions to Swiss data are not that great. Swiss data needs to be super surprising to get a meaningful reaction. So again, this is not my favorite fundamental pair. And yeah, don't bet against the Swiss National Bank. Okay, let's move on to better currencies. The yen, dollar yen. So things are improving here. We have especially dollar yen. It reacts, provides the best reactions to US data. So when US data is strong, dollar yen rises alongside yields. And when the greenback is weak, then data is weak, then dollar yen falls. So there's a good correlation between dollar yen and US yields, and that makes it a more straightforward currency. Another currency which I like is the Canadian dollar. I know it's not one of your favorites, but what I like about Canada is that it's a relatively slow mover. And why is that a good thing? Because when data points come out in Canada, you see a knee-jerk reaction like in other currencies. But it's not the final move. It continues moving in the same direction. It gives time to enter, in most cases, of course. So Canadian dollar is sometimes overlooked, but releases of retail sales, CPI, jobs reports, rate decisions, they move the Canadian dollar. Another thing I like about Canada, at least until now, is that politics don't matter there. It doesn't matter who's in government. It's always very, very calm. So these things are ignored. So data has a strong impact. Once again, I'll provide this warning. Watch out for simultaneous releases in the US and Canada, but apart from that, Canadian dollar is quite strong in terms of reactions to news in Canada. Another currency I like is the Australian dollar. It responds a lot to Chinese releases. Australia exports metals to China, and we have lots of reactions there to Chinese data. So industrial output from China, retail sales, investment, these figures move the Australian dollar a lot. One thing to note, if you're not awake during these hours when Australian and Chinese data points are released, you missed out. The moves are not necessarily sustained into the European session. European traders come in, do other stuff, okay? But in the immediate response, in the first hour or two, Australian and Chinese data move the Aussie dollar. And I live here in Barcelona in the Eurozone and cannot talk about all currencies except the euro. So these are, it's not always easy because the Eurozone is comprised of 20 countries, different interests, but if you watch out for German releases, the largest economy, currently struggling, then you have a better chance of nailing it. German events from inflation, even jobs data, which is not that important in the Eurozone, and surveys by the ZEW Institute, by the IFO Institute, the markets. Regarding the European Central Bank, there are many statements there. They also move markets. You can see when a hawk like Robert Holtzmann of the Austrian Central Bank says something dovish, the euro reacts. When a dovish central banker says something hawkish, then also you see the reactions. Yeah, sensitive to debt crisis news. This is a line I leave here in this. I left here in this presentation because debt is rising once again in the Eurozone. Not an issue right now, but could return in the future. Okay, and we reached the final point of this long presentation. Buy the rumor, sell the fact. You probably heard about it. There's even a book titled that way. So basically, I think I sprinkled this idea during the presentation, but it's a super common pattern. But we get these questions all the time, so I want to stress out that sometimes, let's say the Federal Reserve cuts interest rates by 25 basis points. What do you expect? You expect the dollar to fall. But no, that is fully priced in. So once this is materialized, once the Fed does cut interest rates by 25 basis points, you can see the dollar rising. Why? Because maybe one word in the statement is a bit hawkish. Maybe everything was already priced in and now there's just a move in the other direction. There's profit taking. So once again, these are patterns that sometimes confuse new traders, and I want you to be aware. So if something is priced in, data needs to be extraordinary. It needs to exceed expectations by a lot to extend the trend. So also this is something I want you to be aware of. Yeah, here are a few examples. Well, Federal Reserve, which I just mentioned, political developments, when you have governments sometimes announcing big things, but these things are already leaked to the press, to the government's favorite journalists, then you also already have things moving in one direction. And then the other one in a buy the rumor sell effect. Yeah, I see here another question. Yeah, let's talk a bit about gold. Gold tends to experience such reactions sometimes more than others. So you can see gold sometimes going in the other direction and direction of the surprise, but reversing immediately. So you see the correct reaction, but then things going the other way. Regarding cryptos, they usually take one trend and go with it, but gold is usually just in one direction. Sorry, but rumor sold fact. And yeah, if you're trading gold, then you can use these news events and these quick reversals on gold for scalping opportunities, but always trade with care. Okay, that's what I have for you today. Actually, quite a lot. I've been speaking for a long time. And I see another question. From a day trader point, you still select pairs that have news outside of your trading day, for example, Aussie or Yen? No, unless I see some big opportunities. So the Aussie, as I mentioned, there usually is a reversal, but that reversal happens before I wake up. So the Aussie is not the best example, unless there's budget announcement in Australia quite late, or unless there's the right decision in Australia is late enough for me to be around. Regarding the yen has more of an impact. So you can sometimes see the governor of the Bank of Japan, who is Kazuo Ueda, speaking in the middle of the European morning, afternoon, evening in Japan. And then you see things moving quite a lot. That's what we've seen in recent weeks. Also, once again, dollar yen moves a lot in response to US events. So taking your examples, the Australian dollar is usually, well, it's too late unless you're awake at nights, and the Japanese yen, there are much more opportunities there, despite the fact that the yen is an Asian currency. So, but it moves a lot also in the European and US sessions. Any more questions? Okay. So thank you everybody for coming today. Sorry for the technical issues at the beginning. Well, began 3 minutes late, so hopefully not a big deal. I hope you learned something new or refreshed your memory. Some things here were basic, some were more advanced. Anything on the New Zealand dollar? Yes, I skipped it. I left it, but the New Zealand dollar in general, there are very few events in New Zealand. Most releases are quarterly, so you have the jobs report, CPI, and other figures released only once per quarter. The responses are significant, and it's if you're awake during these hours, it's worth trading. The New Zealand dollar does not react that much to Chinese events as the Australian dollar. That's why I left it. Also because fewer traders are trading it. I know many of you trade gold, cryptos, oil, indices, and this presentation was more focused on currencies, but not a lot of you trade the New Zealand dollar, or correct me if I'm wrong, maybe I'm just not aware of the amount of people trade this currency from such a beautiful country. I visited there 20 years ago. Anyway, okay, thank you very much everybody for coming. We have a few more webinars. If you're not a premium member just yet, I encourage you to sign up. Today's pitch was a bit shorter than usual, so thank me for that as well. And here in Asia, don't really trade. Okay, if in Australia you don't trade the Kiwi dollar, then who trades it? No, I know some people all over the world trade it, but it's not that common. Okay, so thank you very much once again. We'll be here with more webinars in this week and the next. And that's it. Stay tuned. Next week, we have a busier week in markets, and the first week of December is explosive. I chose to do this webinar week when there isn't that much news. Aussie, New Zealand is good. Yeah, I mean, if you look for, any traders look for the big breakouts and lots of pips, and you get that on the yen. You get that in gold. Aussie Kiwi, very few pips, but the trends are a bit more consistent and it has its advantages. See here, last comments. So I'll keep an eye on it, Mr. T. Okay, sounds good. Okay, guys, thank you very much, ladies and gentlemen, boys and girls. See you soon. Cheers. Bye-bye.